All right, it is 8:30 and I will begin. Good morning. On behalf of the Association of Charitable Gift Planners and Madison Community Foundation, I welcome you to our panel discussion, Estate and Gift Planning and the LGBTQ Community. My name is David Koehler, and I serve each of these organizations as a staff member for the Community Foundation and board member for WACGP. Thank you to everyone who is tuning in this morning. We have an impressive group of individuals registered and here, largely comprised of professional advisors and representatives from nonprofit organizations. You all help people make a difference for our community, and it is a real honor to have you here. For those of you who do not know us, the Wisconsin Association of Charitable Gift Planners is a local chapter of a national association. Each year, we provide 3 to 4 professional development, educational, and networking opportunities for individuals who work in gift planning. These are often estate attorneys, CPAs, wealth advisors, and development professionals. Members make our programs possible, and I want to thank those of you here who are counted among our membership. Gallup estimates that 5.6% of the US population now identifies as LGBTQ. This number has risen more than a full percentage point just in the last 4 years. That estimate jumps to 16% when you speak with adults in Generation Z. As Americans increasingly demand equal rights and protections for all people, a growing percentage of the population identifies as LGBTQ. This is a community that continues to fight for equal rights and one that is not discussed often in the realm of estate and gift planning. We have an incredible team here to speak with us this morning, led by John Sims, who is Vice President and Private Wealth Advisor with US Bank. John brings 35 years of experience to serve the needs of his clients in investment management, private banking, trust and estate services, and wealth planning. Many of you know him because he is also highly engaged in the community. Among other things, John serves on the boards of MMOCA, Unity Point Meritor Foundation, the University of Wisconsin System Diversity Council, and the American Family Children's Hospital. He's a Rotarian, and our community is stronger because of his efforts. John, welcome, and thank you so much for sharing your time and expertise this morning.
Thanks, David.
As I turn the internet over to you, I want to invite our audience to submit any questions that you have for the panel using Zoom's Q&A feature. Also, feel free to chat throughout our hour together. Thank you, John.
Thanks, David. Good morning and welcome to today's program, Estate and Gift Planning and the LGBTQ Community. Planning is potentially more important for LGBTQ couples and families, and we would like to discuss some of the differences and nuances in today's panel discussion. As we were preparing for today's topic, we wanted to highlight and remember a very important gift that the William Wortman estate made to the Madison Community Foundation of $1 million to establish the William J. Wortman Fund for Outreach LGBTQ Community Center. This important gift provides $40,000 to $50,000 annually to support their mission and outreach and will continue to grow over time. As the LGBT community is coming into wealth and gaining more and more acceptance, today's topic is of great importance to the community. We will highlight some of the unique planning opportunities and challenges faced by this group in today's discussion. I'd like to introduce today's panelists, Ben Brunette, attorney, Salinger and Brunette, and Mary Strickland, Vice President, Private Wealth Management, R.W. Baird. Starting with Ben and then Mary, please introduce yourself, tell us a little bit about your background, and how today's topic is of importance to you.
Thanks, John, and thanks everyone for joining us this morning. My name is Ben Brunette. I am a trust and estates and small business attorney with the aptly named Sellinger and Brunette LLC here in Madison, along with my business partner, Melissa Sellinger. We advise clients in their creation of their estate plans. We advise clients as they work to administer the estates and trusts of loved ones who may have passed away. And then we also work with a number of small business owners. I started first getting involved with this topic, presenting and really advising on this topic pretty much fresh out of law school. I graduated law school in 2012, which was right in the middle of when the world was really changing with respect to marriage equality laws across the country. So with the Windsor decision striking down the Defense of Marriage Act in 2013, with the Obergefell in 2015, it was a really unique opportunity for me to marry something that I cared a lot about, was passionate about. During law school, my friends who identify as members of the LGBTQ community, as well as allies, it was something we really watched carefully. And then fresh out of law school, it was this opportunity where the law was changing so quickly that you could really make a difference in terms of advising and presenting and giving information to the community about where we were at any given point in time. It wasn't something you needed necessarily years and years of experience advising in, because the law was changing so quickly every day. It was really more about keeping up with it, understanding the relationship between the different states and the different laws as things evolved. And so I started presenting on this topic pretty much right away out of law school in 2012, 2013. And it's remained a really rewarding part of my practice to work with clients in the LGBTQ community and continue to follow, understand the developments in the law in this area.
So I'm Mary Strickland. I've got 27 years experience in financial services. I started my career at Smith Barney, and I'm currently working, as John said, at Baird Investment Management. I've also, in my career, focused a lot, frankly, on empowering women, working with women to grow their investments, and also working with families interested in socially responsible investing. And along the way, I've consciously tried to work and serve the LGBT community. I've also been active in philanthropy. I've worked with Madison Community Foundation, I have an endowed fund there, and also I have an endowed fund at UW Foundation. So I've been very active in philanthropy, both myself personally as well as my clients, and trying to assist my clients with their philanthropic goals as part of their estate planning, et cetera.
Feel really fortunate to have Ben and Mary on today's call. They just have a lot of experience and great background in this area. We'd like to have the panel address a few planning topics and questions today. And you are welcome in the audience to ask, use the Q&A feature in the Zoom chat room if you have a question during the presentation. And we'll also save a little bit of time at the end of today's presentation for questions and discussion. First question, prior to marriage equality laws passed in 2015, LGBTQ couples were not afforded the same rights as married couples. What are some of the unique legal considerations LGBTQ couples and families face with respect to estate and charitable planning?
I think the number one, 30,000 foot level maybe takeaway that makes estate planning for the LGBTQ community unique is the legacy of pre-marriage equality laws and the varying recognitions of LGBTQ couples in terms of their legal relationship prior to marriage equality, and the way that still has some lasting impacts in planning for this group. And so, maybe the best way to explain it is to go back in time a little bit to pre-2015, pre-marriage equality, pre-Obergefell. And what had started to really become popular were legal recognitions that were not marriage and did not include all of the rights and entitlements of legally recognized marriage, but some. So these were known as civil unions, in Wisconsin, domestic partnerships, were that relationship. And what a domestic partnership in Wisconsin was a collection of rights and entitlements that where an LGBTQ couple, a same-sex couple, registered under the domestic partnership laws, their partner would be entitled to certain of these rights. So a number of them, things like the ability to inherit without a will, the ability to transfer real estate, exempt from certain fees and taxes, some healthcare visitation and decision-making rights, things like that. But it didn't rise to the full level of all of the rights and entitlements that would typically be afforded a married spouse. And so what evolved has been this situation where, for example, these domestic partnerships in Wisconsin were recognized and were applications accepted from 2009 to 2018. In 2018, somewhat, I think, in recognition of marriage equality, Wisconsin stopped accepting applications for new domestic partnerships, but did not invalidate currently recognized domestic partnerships. And so kind of what you have is a situation where every couple, based upon the laws and availability of legal recognition for couples that they availed themselves of at the time, have a slightly different understanding maybe of what their status is under the law and what actually how the laws of whether they're Wisconsin laws or federal tax laws apply to their situation. And so you have this legacy, and it's similar cross states. For example, civil unions generally weren't recognized state to state. You had to reapply if you relocated. And so helping clients both at the time understand what that meant for them. And then now, for example, if you have someone coming to Wisconsin, maybe with a civil union in another state, would have had to reapply for a domestic partnership in Wisconsin, but that's no longer available as an option. And so working with clients through those decision-making processes and what that means for them is a really, it's a really unique legacy when planning for members of the LGBTQ community. About, per statistics I was able to find, about 10%, maybe a little bit more than 10% of the LGBTQ community is now married. And so that is a lower percentage than in the non-LGBTQ community. And so each situation has its own unique planning challenges based upon the legal status of the couple that you're working with. A couple of other things that I think are important here, Wisconsin specific. So Wisconsin is known as what's called a marital property state, which means think of it as something as a titling doesn't matter for married couples statute. Generally, with a number of exceptions, in the true legal sense, the exceptions list is probably harder to get your arms around than the rule. But generally speaking, married couples have a 1/2 interest in all property that the couple acquires during the marriage. And so in terms of things like earned income or purchased or acquired property, as a general rule, after the date of the marriage, while a couple resides in Wisconsin, that asset belongs 1/2 to each member of a married couple, regardless of whose name is on the title. That's a bit of a privileged or certainly unique status for married couples. That does not extend to unmarried but partnered individuals, domestic partnerships, anything like that. Under the rules to terminate a domestic partnership, for example, there's not the same type of property division, divorce considerations that there would be in a marriage. And so that's another unique aspect of planning for LGBTQ couples, particularly in Wisconsin. And these can affect not just the couple or the members of the couple themselves, but also their children, descendants, the other individuals they may want to benefit with an estate plan. So things like the way that domestic partnership versus marriage versus no legal recognition for a couple, each different status has a different consequence for if someone passes away, how their assets are to pass at death, especially if they haven't done an estate plan. That not only affects the couple themselves, but children, for example, in a blended family situation, the expectations of how mom or dad's assets may pass if something happens to them might be very different than what the default law would say happens. And so I think there's a lot of really unique circumstances in this when planning for the LGBTQ community that practitioners have to be aware of and have to walk clients through so that they understand the consequences of the legal recognition of the partnership. One other thing I just want to touch on briefly, and that is also being aware of continued legal developments in this area. With marriage equality in 2015, for a lot of LGBTQ couples, planning looks exactly like it does for married couples who aren't members of the LGBTQ community. So that in some ways really created a fine line between what estate planning looks like for married couples, LGBTQ or not. But in a number of states across the country, marriage equality is still, if not under attack, certainly there are political attempts to erode it. You see there were 7 bills in different state legislatures last year alone with the goal of at least eroding certain recognitions for marriage equality. A number of states still have constitutional provisions technically on the books prohibiting marriage, same-sex marriage, or prohibiting marriage equality. And so while these aren't necessarily, I don't think, given the state of federal law, imminent threats to marriage equality, it is something that I think that practitioners need to be aware are out there. And it is something, unfortunately, that does bear watching as we kind of continue on forward and watch as the political winds shift and move.
Ben, this is David Koehler.
Yeah.
While you're on this topic, I just want to offer a question from the audience from Marcia Casita. And she asks, is it important for the nonprofit named in an estate plan to understand the legal recognition type of the donor?
I don't necessarily think so. A lot of that is going to depend, the old "it depends" lawyer cop out. A lot of that is going to depend potentially on the nature of the gift and exactly the structure of how the gift is to be made to the nonprofit. As a general matter, I don't think that's necessarily something that's important for the nonprofit beneficiary of the gift to know. Certainly something for the attorney to who is writing the gift and making sure that maybe the donor has the ability to make the gift under things like marital property laws and things like that. They need to understand that. But in terms of really allowing the nonprofit, walking through that with the nonprofit, that's probably not necessary, particularly if it's a gift that the donor and their plan may want to continue to amend or change as they go forward. If it's something that's, if I were to die today, this is a gift I would like made. However, I reserve the right in 5 years to come back and alter it, whether increase, decrease, change in some way. So for those reasons, I don't think it's necessarily important that the nonprofit understand what the legal recognition of or the legal status of the donor's relationship is. But it is important to think through the mechanics of that when you're actually creating the document that makes the gift, just to make sure that there is the ability and to make sure that the gift actually would pass into the documents the way the donor intends.
Let me move on to the second topic or question. What do we know about philanthropy in the LGBTQ community? What's unique and what's similar for all donors?
Well, I think there's a lot of similarities in terms of gifting, in terms of philanthropy, but there are some differences, and there's been some recent research. The research is pretty new, but one of the things it shows is that dual income households without children typically are larger donors, and most LGBT couples are in that category. However, I will say 50% of lesbians do have children, but the presence or the absence of children is pretty important. For example, those that do charitable bequests through their estate planning, those without children are about 47%, 46% do that. If they have kids, that number drops down to 12%, again, that do bequests through their estate planning. If they have grandchildren, it drops down to 7%. So that's what some of the research shows. So it's a potential, the donor base, I think the LGBT donor base can be looked at as a fairly large donor base. The other thing is when do donors make planned gifts? again, through their estate plan, through bequests, charitable trusts, etc. The average age of all donors that consider that type of philanthropy is about 52 years old. But for the LGBT community, it's a slightly lower at 50 years old. Again, folks that are working with their attorneys, looking at their estate plan and making those kind of gifts probably at their death. The other thing that's unique is, and Ben alluded to this earlier, is that the LGBT community were significantly interested, obviously, in civil rights and anti-discrimination. I think we learned that through the last presidential administration and what happened with transgender rights that were taken away, particularly those that wanted to serve in the military. So the rights that we have, we hope will stand the test of time, but there's no guarantee, frankly. And so I think a lot of money goes into organizations like Fair Wisconsin and Madison that work and outreach that work to ensure our civil rights and prevent discrimination on an ongoing basis. And I think that's a critical difference. Also, I would say on that note that most of us are very involved politically and are involved in politics and make large contributions, which, as most of you know, are not deductible. But I would say I write a lot of political checks, not as much as philanthropy checks, but certainly we do. And in Madison, we're fortunate to have Mark Pocan and Tammy Baldwin, both gay representatives for us in Wisconsin and in our area. And Madison is unique in that regard. The other unique area is that the LGBT community is 4 times more likely to support the arts. I've seen that with Open, which is a professional and business organization, has done some joint events with the Madison Opera and with the Madison Symphony. And so you see that support of the arts. We're also twice as likely to put money into healthcare organizations. And that started more intensely with the AIDS epidemic and has continued on, particularly with transgender rights, looking to find sympathetic and healthcare providers that are going to assist them. So that's very important. We're also half as likely to support religious causes. I look at myself, I went to a Catholic university, but I have never written a check to my undergraduate college, whereas I have written checks to UW-Madison. And also the largest, it's interesting, the largest donations have come from non-LGBT private foundations. So that's the largest source of philanthropy currently. Obviously, those foundations have a lot of money. The Gilead Foundation, corporate foundation, has been a major donor, and they manufacture a lot of drugs for HIV/AIDS, and they've been one of the largest corporate donors. There's a potential, I think a huge potential as we're talking here for some planned giving. I think John's mention of the outreach example is really amazing. When that happened, I know that rippled through the community. And I think when you have a large gift like that, it makes other donors look at that and say, well, couldn't I do something like that? And so it's that gift stands as a model gift, I think, in the community for the LGBT community to start thinking about maybe making gifts that are larger than a couple $100s a year to an organization. And what will their legacy be, particularly those that don't have kids? I also want to say I do believe there's an overlap with women's giving and lesbian giving. I'm very involved. I've been involved with a fund for women, which is part of Madison Community Foundation. And so some of the goals and objectives of women and feminist philanthropy, I think, is similar to lesbian philanthropy. Where we're similar, obviously, the biggest issue in the last couple of years has been the standard deduction going up to about close to 25,000 for those under the age of 65. So that results in some strategies like bunching every 2 years, because you really have to write a lot of checks to get over that threshold. IRA qualified distributions are still available, and I have a lot of clients that are doing using their IRA required minimum distributions and using those distributions for philanthropy. planned giving, as we talked about in terms of bequests, charitable trusts. We see more and more of that. John and I were talking earlier in our planning that we're seeing more folks look at some charitable trusts, which are a little bit more sophisticated, philanthropy, real estate, life insurance, annuities. Most every nonprofit, large nonprofit, has some type of an annuity that they offer donors, where you can use the proceeds at your death for the nonprofit, but live off the income until then. So there's some similarities, but there's also some differences. And I think the main thing, as I've done in my practice, and for those of you that are development folks, is to target your donors better. You know, there's a tendency, particularly I see among nonprofits, to treat every donor similarly. But the reality is you have women donors, you have LGBT, you have minority donors. The typical stereotypical older white male donor has really gone by the wayside. And so if you want to generate significant giving, I think the more that you can target your donors and that you have the capacity to target your donors, the better.
It kind of seems to me like the LGBT community is probably coming into an era where we're going to be a lot more, have the resources to make significant gifts like the Wortman gift. I mean, it feels like many of us are first generation professionals that we're out and we're able to express ourselves in our philanthropy. So I'm pretty optimistic that this is going to improve over time.
John, we have another question from the audience from David Saul Cedar. And David asks, what's the difference between setting up a foundation, a charitable trust or similar, or just a cash donation at death? Can these be set up prior to death? Who controls them?
Oh boy.
I would say that's a complicated question. Obviously, checks are written during your lifetime, bequests are made at death. You need to work with somebody like Ben if you wanted to develop some kind of a charitable trust. There's a number of options for charitable giving through your estate plan. Ben, do you want to add something here?
Yeah, I think this is a great chance too to talk a little bit about donor advised funds throw those into the ring of this group of charitable strategies. Charitable trusts and foundations particularly, I would say, I've talked to a number of clients who are interested in foundations, and more often than not, when walking through the difference between, say, a foundation and a donor advised fund, the client decide, actually, I think I'd like to go a donor advised fund. A foundation, for example, think of it as almost like a small charitable business. It's going to require significantly more upkeep, maintenance, attention. Foundations can be great, where there's a client who really wants to have a family foundation and they want it to be sort of this own operating entity. They can be a great strategy when they work, when the situation is right. But more often than not, for example, the difference between that and a donor advised fund is an opportunity to have something of a charitable bank, a fund where you contribute the money for the charitable deduction. And then over time, the money is distributed out to charities. That's controlled usually by the person setting up the donor advised fund. But the part another reason I really like donor advised funds is those provide then the opportunity for the creator of the fund to indicate who will make those decisions when they are unable. And so they're these really great family charitable planning vehicles where you can really bring in, whether it's multi-generational families, whether it's across families, kind of whatever the group is, has a really great opportunity to kind of rally around this donor advised fund and participate. And so, these are different vehicles of varying degree of complexity and of maintenance. But I would really, I think, probably at a high level, draw a distinction between something like a foundation and a donor advised fund. A charitable trust is usually there, again, a number of different kinds, usually done for some either advanced tax planning reasons or something like that, a little bit more maintenance. And so drawing a contrast between, say, a foundation and a charitable trust and a donor advised fund, or just simply making a gift in your estate plan in a will or a trust document.
It seems like as the standard exemption might be lowered in the future to fund the deficit and a lot of the programs that are going on, that I think more advanced charitable remainder trusts, maybe naming IRA beneficiary to be a charity. I think we're going to see more and more of those types of planning strategies once we know what that level is going to be going forward.
I agree.
Let's move on to the next question. While LGBTQ families are growing, historically, many did not have children. How does the presence or absence of children impact estate and charitable gift planning? How can LGBTQ donors use estate planning to care for their loved ones and meet their philanthropic goals?
I think I can take that initially too. And I think, there's a number of different ways to plan for both charitable giving and to plan for whether it's children or whether it's maybe a situation where a couple has different beneficiaries that they want to plan for in their estate plan. Traditionally, in situations where there are children who a client wants to provide for, but also wants to provide for charity. In those situations, you can do things, whether it's as simple as carving out a percentage. It really gets to be an issue, though, of estate. And this is, I think, a broad point I'd like to make about estate planning generally. The documents are going to be important, but what the documents are going to be designed to do is to follow and reflect the actual assets of the particular client. And so, John had mentioned something like naming a charity as the beneficiary of a retirement account. Generally, that's a good strategy where a client wants to benefit a charity, but also individuals, because those same individuals, if they had received that retirement account, say an IRA, will generally be paying taxes when they take distributions from that inherited IRA, as opposed to, so if you have $1 million IRA and you have $1 million cash account and you want to benefit children and a charity 50-50, generally the most tax efficient way to do that is going to be to leave the cash account to the children and then leave the IRA to the charity, because as the charity takes distributions from that IRA, it's a nonprofit organization, it's a tax exempt organization, it doesn't pay taxes on those distributions from the IRA. And so that's just, I think, one of the clearest types of strategies. Another big thing for clients to think about, and this is particularly in situations where there may not be children. You've got a couple, it's not necessarily a blended family situation if neither member of the couple has children, but they do have some different goals in mind for their estate plan. Oftentimes you'll see a situation where a client says, well, I really want to provide for my partner. Then if I die first and I want to provide for my partner and make sure then that when he or she dies, I want whatever assets to be available during his or her lifetime. When he or she dies, though, I'd really like to know that these assets are going to nieces and nephews, charities that are important to me, whatever that might be. And this is a really great example of where trusts come into play. So trust can be structured to provide things like income streams, to provide access to assets without the full control of being able to change the ultimate disposition of those assets. And so you may have a situation where you've got a trust set up for a partner that will distribute all the income to that partner during his or her lifetime. And then at his or her later death, that trust then distributes the remaining assets out to who the client had intended. So that's just a couple of examples, I think, of the ways in which estate plans can be catered to solve their family situation.
I think I want to add one thing too with families is I think, as with all families, you want to include the partner or spouse in those discussions. And a lot of philanthropy, frankly, in my parents' generation, the father, the husband, they, wrote all the checks, frankly. And I remember my parents having a discussion, and my mother said, well, Hank, if you're going to write a check to West Point, which is a publicly funded institution that's of that size, I'm going to write a check to my women's college of that size. So I think the same thing applies with the LGBT community. You want to bring in, particularly if they're in a couple, whether they're married or not, you want to bring in that couple together and work with them together because they're probably making some of those philanthropic decisions together, and that's important.
John, this is David. If I can offer a couple more questions from the audience. Sue Hickey asks, when estate planning for same-sex spouses is the best way to protect spousal rights to ensure that the trust status is a state that recognizes same-sex marriage? Is there other language to protect those rights and the rights of their families?
I think a trust situs question, Sue. I think so. Trust situs is a complicated estate planning idea. I think, generally speaking, with marriage equality recognized across the country, you should be okay in terms of things like recognition of marriage or a spousal trust or things like that. So I think Obergefell in 2015 and the federal tax laws largely prevent the need for a lot of, say, moving trusts around solely to make sure that you are in a safe marriage equality state. That being said, these laws do change, and unfortunately, this is nothing is set in stone in this way, and it is something definitely to be mindful of, especially if you start to see any of these kind of federal recognitions of marriage equality begin to erode. So a point well taken there. I think certainly to stay up on the developments in the law state to state as well as federally in that area. And then in terms of the language, I think it's really about making sure that the attorney understands the marital status of the couple through time, not necessarily just the snapshot of when they are meeting with that couple. If it's an unmarried couple in the moment with the intention of getting married, or as that discussion progresses, I think the couple looping in their attorney is going to be important, particularly if there are family challenges that there are concerns about. I think that's one area that I would particularly mention here is if there are LGBTQ clients whose families are not particularly embracing of their relationship, whether that's a legally recognized marriage or not, that can be an important factor that can somehow then need to be incorporated into and reflected in the documents that get drafted.
Thank you, Ben. I learned a new word there. How aggressive, so this question is from Eric Greeling. How aggressive are the Fidelity Charitables of the world currently marketing after-death trusts and or donor-advised funds to be held by these very large investment firms? Should charitable organizations with endowments regard them as competition? If so, how should we compete?
Well, certainly there are a number of investment firms and organizations that are offering donor advised funds. For example, Madison Community Foundation, I've had some of my clients set up some donor advised funds through them. Also, I've had some other clients that have wanted to go with Fidelity or Schwab. Typically, you can have some control in how those investments, whether conservative or aggressive, are set up. But certainly, I would say they are competitors. I mean, a lot of nonprofits or foundations can set up donor advised funds, but they're also set up through investment firms. But I think that the objective, obviously, is ensuring that you're getting some of the checks out of that donor advised fund. So as a nonprofit development person, I'm not sure if it's direct competition. I guess it would be called some competition, but you want to make sure that you're in front of that donor and getting some of those checks that are written from the donor advised fund, usually on an annual or biannual basis.
Harry, this is David. I would also add that a number of the large commercial providers of donor advised funds, a lot of those funds are not permanent. And so as a nonprofit organization, if you're working with donors who make gifts to you through their donor advised fund, it would be appropriate at some point to talk about the potential for that individual to include your organization in their estate planning. And when you think of estate planning, in addition to beneficiary designations and being named in a will, you could also be part of the succession plan for their donor advised fund. So that donor advised fund could make distributions at the end of that individual's lifetime, which could go to your organization. That doesn't happen with funds that are permanent, and often those are set up to benefit charitable organizations in perpetuity.
Let's move on to the next question. What are some of the strategic ways LGBTQ donors are giving today? These probably are the same for all Americans.
Well, I think part of that question has to do with, as development folks or as attorneys or advisors, how can you increase the amount of LGBT donors that you're working with and that goes to you? And I would say that there are, depending on the type of organization, if you're a healthcare related organization, if you're an arts organization, you have probably a stronger foothold into this donor base. I think you need to look at marketing materials. I know a lot of investment firms are developing unique marketing materials for this market. So making sure you've got marketing materials that appeal to this donor base, the LGBT donor base. Doing events, as I mentioned, I'm aware some nonprofits have linked with Open and some other gay organizations to do events together. Also having your development folks attend some of the dinners, the outreach dinner or the New Harvest Foundation dinner, some of the Open dinner. Most of those organizations have events either monthly, they have an annual dinner. That's a way to get in front of that donor base. And also one of the cheapest and easiest strategies I think you can use is social media. How does your digital platform work? And that's a very inexpensive way to keep separate donor bases, whether it's your women's donor base, your LGBT base, and to segregate those email lists, social media lists. For example, I do work with LinkedIn, and almost all of my social media marketing is on social responsible investing. So people know that in this community, if they want to do some investing with social responsible investing, they come to me. And also networking with, as you're doing here, with LGBT circles of influence, attorneys, financial advisors, CPAs. I think linking with those groups is important, but kind of gets back to what I was saying earlier. The more that you can segment your donor base, not just LGBT, but minority, women. Look at United Way. They have a whole women's group. Everybody's kind of jumping on the bandwagon with the women's groups. But the more that you can segment from a marketing perspective, your donor base, and like I said, there's cheap ways to do it with social media. There's obviously more expensive ways to do it with events. But the more that you can segment, the more success you're going to have. And you're going to be seen as a organization or a nonprofit that is very interested in the women's market or very interested in the LGBT market. And if you can show that interest, back to Dale Carnegie 101, showing interest in other people and organizations, that gets your foot in the door and that gets you close to those donors. Because really, those relationships, as most of you on this webinar know, are developed over time. It takes a long time. I've been in the business 27 years. I wouldn't have done this seminar 27 years ago, frankly. I wouldn't have been able, I don't think, to develop a good client base doing this seminar when I started in the business. And as John said, we're really the first generation, frankly, of the LGBT community to have significant assets to be able to participate more fully in philanthropy. And so I think the market is new, is young, and is strong, and frankly is a very good target market for nonprofits to focus on. You guys want to add to that?
Yeah, I would add, Ben and I have both been involved with the MoCA, and I feel like they're one organization that has, Madison Museum of Contemporary Art, they're one organization that has a very developed planned giving committee and have programs to stay connected to their donors. And I think providing donor education at some really help all donors, but especially link with LGBTQ donors through those types of programs. Let's move to the next question. How are current tax laws impacting LGBTQ individuals and couples? What type of changes do you anticipate from the new administration?
Sure. If I were to, yeah, so this I think probably requires a very quick overview of estate tax laws generally to talk about what they are and then how they may change, and then briefly how I think they particularly may impact the LGBTQ community. For folks who don't follow the estate tax regime too closely, briefly, the federal government basically gives each person a lifetime exemption. And I'm going to smoosh a couple of concepts together here, but the federal government basically gives everyone an exemption and says you can give assets away during your lifetime and then at death up to this amount. And all of the assets that either then pass to individuals, either due to lifetime gifts or at death, in excess of that amount, the estate tax applies, currently about 40%. That exemption amount is at an all-time high of about $11.7 million right now. It was doubled as part of the Trump tax cuts from about a little over 5.5. Now it's all the way up to 11.7 per person. Scheduled to come back down to between 5.5 and 6 or so at the end of 2025. There is discussion among the estate planning community that this may be brought lower earlier. And so either accelerating that that December 31st, 2025 sunset to as early as next year or January 1st, potentially even bringing it back further than that $5.5 or $6 million. Discussions during the primaries, the Democratic primaries had said some numbers turn out were like $3 million per person. That would have a big impact on everyone, certainly, because that number then applies to, say, at death, say you make no lifetime gifts, significant lifetime gifts to individuals. That number applies to everything a person owns at their death. And so by the time you boil down the asset value of real estate equity, of retirement accounts, life insurance, brokerage accounts, everything, that number will, the lower it drops, the more persons it impacts. Particularly for the LGBTQ community, this is important for a couple of reasons. One, generally speaking, transfers to spouses don't count towards this number. And so lifetime gifts to spouses or gifts, the standard kind of all to spouse under a will doesn't reduce someone's exemption. However, if these gifts are made to anyone other than a spouse, it does. And so this is something for the LGBTQ community, particularly for persons who don't have a legally recognized marriage, that can become really important, because transfers among partners or between partners then will reduce that exemption. So that's a huge piece. The other piece is there's a concept called portability. Now we're getting a little bit deeper into the tax laws, but this idea that if someone does not use up all of their exemption by the time they die or in the administration of their estate, a surviving spouse can port or take over the rest of that exemption. So if under the current $11.7 million exemption, someone is married and only uses 1.7, the surviving spouse can then add the $10 million exemption to their exemption, only available to spouses. And so again, unmarried couples would, especially if this matters for more person, the lower this exemption comes down, the more people this will impact. So I think that is one particular area that we are watching really closely, and that particularly for LGBTQ couples who are not married would probably have a disproportionate impact due to the lack of ability to transfer assets as freely as spouses do. One other concept, just briefly, that I want to hit on, and I'm not so sure there's particular application or relevance just to the LGBTQ community here, but another concept is cost basis. So cost basis is basically what you pay for something. It's used to calculate capital gains tax. So the standard Apple stock example, you buy for 100, you sell for 1,000. Your cost basis in that stock is $100. And so when you subtract that from your sale price for 900, pay capital gains on the 900. When someone dies, that cost basis in those assets is stepped up to the fair market value as of their date of death. The idea being that whoever then inherits that asset can turn around and sell it the next day with no capital gains tax. So that same Apple stock, the owner dies owning it, passes it on to anyone. That person then, when they inherit it, can turn around and sell it without capital gains tax. One of the other policies that was discussed that during the primaries that everyone's kind of keeping an eye on is that then candidate Biden was a proponent of doing away with the step up in cost basis, meaning that you would then inherit an asset with the same basis as the person who passed away. That's actually how gifts work. When someone makes a gift during lifetime, you don't get that step up. It's only at death. And so this would make those two transfer methods consistent. But those are just a couple of the tax law changes. Again, I'm not so sure the cost basis piece is particularly relevant, is any more or less relevant to the LGBTQ community than just taxpayers in general. But particularly the estate exemption, the gift and estate tax exemption reduction is something we're keeping a really close eye on too.
It seems like we might see more direct transfers of appreciated assets to nonprofits, maybe as a result of some of the impending change. I mean, we see a lot of that, but I think you could see even more of that use going forward, probably.
Yeah, I think so. And yeah, John, that's a really just good point to make in terms of one of a good strategy for charitable giving is oftentimes transfers of assets that would, if sold and then the proceeds given to the charity, require the owner to pay significant capital gains tax. Again, similar to the idea of passing the retirement account on, by giving the asset directly to the charity, letting the charity sell it and keep the proceeds, oftentimes there's a lot less capital gains tax, if any, that is paid or made a part of that transaction.
Yeah, I think especially as so many people have seen their portfolios grow significantly over the last 10 years, I think that's a really important planning tool.
Absolutely.
Let me move on to the final question, and the numbers around this really were surprising to me. Today, only 28 cents of every $100 awarded by U.S. Foundation goes to support LGBTQ issues. What opportunities do you see in increasing donations to LGBTQ nonprofits and programs? How can nonprofits and foundations reach this community?
Okay, well, I think I talked about this a little bit earlier in terms of the importance of targeting your donor base and segmenting your donor base. And I think I want to just talk a little bit about development in general and how it applies to the LGBT community also. I think it's important to be a little more, for nonprofits, particularly development folks, to be a little more aggressive, frankly, in their outreach. I think folks need to look at their A list of donors, and those are the folks you want to be taking out to lunch. Those are the folks you want to be inviting to events. In some ways, it's not much different than John's and my business, frankly. We have to develop a client base, and we've got to grow that client base. Same thing with a development person for a nonprofit. You've got to target a donor base, expand it, and get on the phone, invite people to lunch. I see a lot of nonprofits, frankly, that are not very aggressive in their development efforts. We used to have an expression at Smith Barney, you mail, you fail. And now I think it's you email, you fail. In terms of if you send an email out, but you don't follow up with a phone call to that donor, your chances of converting that donor or increasing the gift of that donor are going to be slim. And I think that applies to LGBT community, the women's community, and donors in general. So I think the most important thing is to be aggressive a little bit in your outreach and segment your donor base, use social media, use digital marketing, do events, do seminars, bring in folks into your, as part of your event. I did a lot of seminars for women investors, trying to empower women to grow their investments. And you can do the same thing with a nonprofit. Educate your donor base on different strategies besides writing a check that you can utilize in your philanthropy. And so I think that's also very important.
I also think that nonprofit organization boards really need to focus on DEI. I'm really building diverse board members that are more reflective of the community. I mean, including people of color, more women, LGBTQ individual representation on boards. If you really want to reach the community, I think I can't emphasize the importance of really having a reflective board and how much that could really help an organization in its fundraising and development efforts. Well, I think that is, those are the questions that we wanted to cover today. I don't know if there's any more questions from the audience or any other questions that we could answer.
Seeing none.
If not, I'll turn it back over to David.
I'll stop being the voice from nowhere here. Bear with me for a second. Great. Thank you, John and Ben and Mary, for offering this discussion today and sharing your expertise and passion. Very important, informative discussion. Thanks to all of you who tuned in and for the work that you and your colleagues advance for our community. A recording of this seminar will be available on the WACGP website. I just want to mention a couple of dates and ask you to hold your calendars for upcoming WACGP programs. We have real estate and gift planning with Colin Nemeth on June 8th, happy hour and trivia with Greg Rademacher on September 14th, and our annual meeting program to be announced on November 11th. If you are interested in learning more about WACGP or becoming a member, please visit our website, wisconsinplannedgiving.org. With that, just want to thank everyone again for being involved today. Stay safe and enjoy this beautiful day. Thank you.
Thank you. Thank you.